everyone, and welcome back to Globe Official. I'm your host Sunlight, and today we're starting a new series called Inside the Markets, where we welcome industry professionals to talk about their experience in trading and also their insights on the macroeconomic trends at the moment. So, to kick things off, we have Stephen Wu, founder and general partner at Carthage Capital.
So, Stephen, could you tell us a bit about yourself and how you ended up starting Carthage?
Hi, yeah, happy to. So I started out my career, I went to college at Carnegie Mellon studying computer science and philosophy, and I started out as a machine learning engineer. So I actually didn't know I was getting into hedge funds at all, but I started out, modeling out statistical probabilities. I worked at Amazon Go, deciding what items people took from the grocery store shelves, right? And then I met, my partner, and he's been in hedge funds for over 10 years, and he's vice president at a respectable firm. And so he's been trading options for a long time. And we became good friends, but we ended up actually creating this strategy where I model out statistical probabilities, portfolio, simulations, and like modeled out the worst case scenarios, best case scenarios, and probabilities assigned with each case. So long story short, we just worked together and started trading, and here we are today.
Yeah, awesome. So, speaking of here we are today, could you give us an introduction of Carthage Capital and what are your kind of values?
Yeah, happy to. So at its essence, the main summary is that instead of buying and holding stocks, where no matter how smart you are, stocks can go up and down, and you'll definitely have stocks that go down. In that case, you either sell at a loss or you hold and hope for the future. No one can predict the future, and we don't try to. So basically, instead of selecting stocks or cryptocurrencies, we sell weekly and biweekly call and put options to generate 0.5 to 1% profit consistently every single week. And so, yeah, we've been doing this for 3-4 years together. My partner has been doing this for, again, 10 years and worked at hedge funds. So we follow these names and these companies for a long, long time. And we only sell options at strikes that are very, very safe and consistent. So we can generate that safe 0.5 to 1% that compounds to 30 to 70% each year. Yeah, and that's, I guess our values are valuing consistent, safe, and strong growth, minimizing risk, and maximizing our profits. For example, if a stock maybe goes to suboptimal ROI levels, and we have another option that has the same return, but it's a much safer option, we could roll it out into the other option, or, hedge some bets and basically watch it all day, every day in our portfolio.
Awesome. Yeah. So you're talking about calls and options and stuff like that. So, and you're talking about how it's safer. Can you guarantee always that it's 0.5 to 1%?
Of course not. And like no one can guarantee anything in life. That's our targets, right? So the reason why we say 0.5 to 1% is because on a marginalized basis, you can sell. So basically, instead of like betting on a direction in the market, every Monday, let's say we're 100% cash. And then we wait till after volatile events happen. So we wait till extremely, things happen, and then we can put on our positions. So for example, Workday has never dropped 17% in a 5-day time period in history. And so for something like this, we could sell 25% below the money, and every week's kind of safely generate profits while avoiding, let's say, like earnings weeks, investor meetings, announcements, FOMC, the Fed speak. So on weeks that there's as little risk as possible, it should somewhat behave as a normal stock as long as nothing materially has changed. So, we identified these types of weeks where there's as minimal events as possible, sell at statistically improbable levels, and we have, a wide variety of buckets and names that we keep track of. And so only when the stars align that like, okay, this is a safe and good trade, we can do that. And so, yeah, 0.5 to 1% is a target, but that's kind of what we've been averaging. We've been averaging actually higher than that, about 1.4% per week, but we don't want to promise anything at all.
Awesome. Well, congratulations on that anyway.
Thank-
So yeah, I know you were talking about, you trade both stocks, like traditional stocks, and also cryptocurrency. So could you tell us about how your trading strategies, sorry, differ?
Yeah. So actually, for this fund, it's specific for stocks because well, and then I'll talk about so the cryptocurrencies is just a small percent of my personal portfolio. And basically for stocks, for this strategy, it's safer with the high returns because there's earnings, there's actual profits of a company and headcounts. There's a lot of data, like we have credit card data, website traffic data. We have we're in all the investor meetings, so we actually talk with the CFO a couple times a year and are up to date with everything is possible with these equities companies. So the difference is that with this strategy, it works for equities because let's say, for example, Q3 last year, Adobe missed earnings because so the stock dropped 20% in a day because they acquired a company called Figma. And so we were comfortable selling puts a month out at 11 times EBITDA, which is a bankruptcy level for for a software type of company. And so because they have earnings, they have profits, like it's easy to calculate this is an average bankruptcy level for software, and then it won't get there because they're profitable. So that's the type of thinking we do for the fund. Yeah, and the strategy really applies to any asset. So you could sell puts or calls on crypto, on Bitcoin. The only reason I choose to sell it on equities is that when I'm looking at the different assets, for equities, I can gauge some kind of floor or ceiling. Like there's actually earnings and there's specific events. And so like I can tell when a stock is relatively cheap, when the multiple has compressed relative to the profits. But if you're an expert in crypto, you could sell puts and calls on a weekly basis or monthly, depending on your own strategy, and make this consistent profit as well. So, for example, you could sell it on Bitcoin at maybe Six Sigma level events, statistical improbable events. The only reason why I don't do this on crypto is because you've seen Bitcoin and Ethereum crash or just spike up super hard. So it's a little more dangerous. So if I were you, be careful selling it on crypto assets. But it's definitely a lucrative strategy you can try out. And for crypto, it's very different because there's no earnings and there's no Bitcoin is Bitcoin. And there's different gauges like developer communities, there's ordinals now. And so for my personal portfolio, I just hold some Bitcoin and basically sell covered calls, to generate some consistent profits at prices that I would sell it at. I just buy and hold.
Okay, so is that just with Bitcoin, or do you deal with any other, altcoins?
Yeah, honestly, I made a lot doing the equities strategy. We were up, 190% in 2020, 140% in 2021, and 30% in 2022. So I just want to grow and, do safe things. So I don't want to gamble in altcoins or, I don't know that area as in depth. So leave it to the experts. If that's your specialty, go for it. You win, you beat me, right? I don't want to fight. So yeah,
Awesome.
I mean, clearly Bitcoin's going to be more ubiquitous and Ethereum as well. So I just hold those.
Awesome. Thank you. So, you were talking about, you always have to stay on top of, like, keep an eye out on different assets. So, how do you stay on top of market trends and news in such a fast-moving industry?
Yeah. So let me think. I have a bunch of different subscriptions. Let's see. So FactSet and Bloomberg for equities, that's definitely very useful. I have, CNBC Pro, and so this is good because they have breaking news notifications. So anything like economics related, I would get a notification immediately on what happened, what announcement. I also have price. If any of the stocks on my watch list move plus or minus 5%, I'll get a notification on my phone as well. So that's kind of overall, I guess, viewing of the market. But I also, let me take a look. I also look at many websites like, Hypergrowth is good for looking at new ideas. There's a website called insidertrades.com, and it's not insider trades, but
Yeah, no insider trading here.
clearly,
Yeah.
but it's basically a daily email of all the CFO and CEO purchases and sales of their own stocks. So if the
Oh, wow.
CEO sells, yeah, like $10 million of stocks, I would like to know that right now. So
Yeah.
highly recommend that one. Let's see.
Okay, so it's kind of like copy trading in a way. Well, it allows you to copy trade. No?
Well, historically, CEO and exec team haven't outperformed, so it's not, you can, but the, there's definitely something going on, and like
Mm.
no one can predict the future. Even the person who's in charge of the entire company, they can't predict the future. But if they're selling a large chunk of their, it could also be many different reasons. Maybe they're buying a house, maybe they're just diversifying. But it's a good data point. It's one thing to know. And then if I see like the hedge fund is also liquidating, and then maybe the algos are bidding it up or retail is buying, maybe that's a sign. Maybe there's a sign that some smart money's coming out, and just something to stay away from if everyone is selling, right?
Something that's been dominating headlines at the moment is artificial intelligence, of course. And I feel like it's one of those things that can really impact trading. So do you feel like AI is able to kind of take over in terms of trading? Or yeah, what's your thoughts?
Ooh, big question. Take over all trading. Well, you can already ask it for stock ideas, though I don't know if they're great stock ideas, but like currently, I guess there's two different areas, right? One is doing fundamental research and understanding a company's long-term growth potential with AI. And the second is, obviously algo trading and AI trading on high frequencies or different support levels. Um, and I think AI has done a decent job at least the algo trading side. Citadel is very profitable, Renaissance. So, but then basically AI can't understand, earnings calls. They can't hop on a phone call and listen to the CFO speak and understand what's going on in the long-term impacts of what he's saying, right? And so I think AI is in a great spot now where it has done a lot of there are a lot of use cases, like algo trading is based on historical price movement and Black-Scholes algorithm. And so but then they're good at doing above expected performance on thousands of companies. Let's say even if you're 55% correct, you would on thousands of companies, that's great return. And then so the reason why we're different is because we do similar, but we only focus on a few specific companies, let's say 20 to 30. We are in on all these phone calls, we have credit card data, we have all this data, and like we talk to sell side analysts and understand like what the overall human sentiment is, right? People could feel scared and not sell yet, and like people could love a company and they're waiting to buy until like things settle down. Like understanding the overall landscape and understanding people's psychology, that's something we specialize in and understand so that we can make trades better than the AI. And currently that's the case. I hope AI could, understand and grow more, and it would be definitely a tool we could use to complement our trading.
Awesome. And also, we were talking about this before how, if everyone's just trading off technical analysis and everyone has that same information, how are you supposed to, make any profit if everyone's making the same trades of the same information, right?
Great question. Well, I mean, it reaches technical levels, it could follow the trend. Let's say like people follow it because it works 80, 90% of the time. Perhaps it does. I don't know. But the 10% times it doesn't work and it often breaks trends, then you lose money, right? Then like the algorithms are designed to like entice traders and they're designed to push levels down where you sell. Sometimes even you can see the stock price just flip down and come back up, right? Sometimes you see that. I'm like, why does that happen? AI shoves the price down to margin call someone. And I'm not saying this is fact, but I'm pretty sure this is what's happening. It margin calls someone and then goes back up and buys it back up. So they can basically like it's pretty brutal. They take, they take your money. Um, and so AI, like you can follow technical analysis and I use it as a gauge, but I wouldn't fully rely on it as maybe let's say a, a large position of people are following it. The AI sees your order flow and they can kind of gauge, oh, a lot of people are following it this time. Let's break the trend or, let's push it against them. And again, like you said, if everyone follows the trend, there's no money to be made because everyone is doing the same thing.
Yeah, awesome. So actually, thank you for those positive words, the human connection towards trades and the psychological levels, right? So let's talk more on emerging trends. This being a crypto-focused podcast, could you tell us any trends you think, you might be interested about in the future in crypto?
Yeah, sure. Let's see. So I think we need to follow where smart money is, right? And like within crypto and within the whole world, there's a crypto bull market. It's been great. Um, and now we're seeing AI, like my venture capital friends tell me that a lot of these AI companies have historically high valuations. And so, but then meanwhile, other companies may not because, funding is difficult and in this bear market time. And so you see like in the height of crypto, a lot of crypto companies were getting extremely high valuations. And then now maybe it's a little difficult to get that high of valuation, but now AI is getting these high valuations. So um, I do think AI and crypto have extreme, long-term, like amazing value, like world-changing value, right? And I just think my advice to investors on these trends is don't chase, never follow the hype unless you're sure it's like early on, because you don't want to be the one investing at a $10 million valuation when the company maybe isn't even making any money and it's it's may not be that high. So like I would advise people to stay away from cool and like interesting, exciting trends and understand where the market is heading, right? So yeah, just use your best judgment. Don't do anything too extreme. Um, yeah, I guess on the crypto side, we see a lot of movement toward like gaming is still strong. There's a lot of movement. Uh, I guess in terms of Bitcoin, with ordinals developing and more, I guess being able to build layer twos on Bitcoin, perhaps there's more use cases now for Bitcoin, right? And maybe that ecosystem is growing. So that's why I shifted my portfolio from like 50-50 to like maybe 60-40 Bitcoin, Ethereum. But yeah, again, just trade, make reasonable profit and buy low and sell high.
Oh, hi. Yeah. So how would you deal with your emotions when you think, "Oh, I could have did that better"?
Yeah, absolutely. And when I was a new trader, like I felt these all the time, and I would buy back in at a higher price, and sometimes it would keep going up, and sometimes it would, go down, and then oh, I wish I didn't buy back in, or I'm so glad I bought back in. But I realized after years and years, these thoughts of I wish I bought back in, I shouldn't have sold, that's emotion speaking, right? So like your portfolio, the stock price has no emotion. And if you sell it at a good price, like a factually, like, for example, a company that's valuated higher than all of its competitors in the sector, at least in equities, right? I can take a look, oh, this is the highest valuated company, but maybe this other one is like Datadog is one of the best trades this year because it was valued on the lower side in software, especially for logging. Then it shot up to like $93 per share now from 60. And so at that point, I would sell. I'll be happy selling. And yes, it kept going up. But today I don't look back, you know, like it's a good trade. You have a thesis, you follow through on your thesis to the end of the thesis. Anything additional to what your original like trade time frame and thought was is a new thesis, right? And so that is a separate thing you should treat. At $93 a share or something, you should decide that separately from what happened in the past. Yeah. Like, what was it called? GameStop and that whole thing. After it shot up and I was late towards it, I'm like, you know what? I don't know what's happening. Like, I don't have a thesis on this. And like, there's hype train, but there are experts trading this and people pushing these movements better and faster than I am. And I'm just following, right? So I'd rather stick to my strengths and like not touch it at all.
Yeah.
Unless, you know, some people's strengths are looking on Reddit and finding out GameStop and stuff. If that's your strength, you should, you know, follow through with that.
Yeah. Awesome. So actually, let's talk a bit more about your thesis. What kind of thresholds would you put into your thesis? Do you go, okay, if it goes up by however many %, I'm happy with that, or is that it?
Yeah. I guess so. For this trading strategy, I'm selling puts at levels and betting that by a certain time, it will not get below a certain price. So, for example, what was it last week or 2 weeks ago? AMD reported earnings and they missed their earnings and they lowered their future guidance. So there's a lot of selling pressure. It dropped 9% in one day. So I saw the premiums were still high on the first 5-10 minutes of trading. So within the next 3 days, what are the chances AMD will go back up 9% in 3 days after they missed earnings and lowered their future guidance? Like, basically very low chance. So I would sell prices at the same price before the drop for the 3 days. So that's my thesis, right? Listen, in 2-3 weeks, I have no idea. And I don't, but in the 3 days, I also know it's a hedge fund heavy stock. So like, if it goes back up, there's selling pressure. Like hedge funds are fast money. They buy quickly and sell quickly. So if it goes back up to the price, like they might take profit. And so, yeah, like just also, you know, today Intuit had pretty bad earnings, to say the least. So I did the same thing there. And just following each stock and understanding if they had, you know, fantastic earnings, raised guidance, everything's great, maybe I would sell puts at lower prices. And so, yeah, if my advice for a stock picker would be that have a thesis, understand what asset you're buying, right?
Awesome. It's interesting to see the kind of traditional trading mindset compared to the crypto mindset, because in crypto there's a saying, it's you only lose when you sell.
I've heard that. Yep.
Yeah. So yeah, I mean, I guess the whole point in traditional trading is to make that profit, right?
Well,
Yeah.
that's my philosophy. Like in crypto too, like things can go to zero, and we've seen that many times. Yeah, sure. Lose when it goes to zero too.
Yeah. Okay, yeah. You only lose when you sell and go to zero. But
Fair enough.
yeah, gosh.
Some things
I
don't
mean,
come back, you know. So like maybe you only lose when you sell for a a good, you know, selection. But for altcoins, I would definitely take profit. You can always buy back in again. Like it's not a big deal.
Yeah, awesome. So I know you said you have quite short time frames in which you have your theses. So can I ask, if you have any, what are your next steps for the future at Carthage?
Sure. For the future, well, we're fundraising. So basically the past 3 years and the performance, we've been doing very well in our personal portfolios. And 2022 was, a difficult time, and we managed to be up 30%. We've ironed out all the details of our trading strategies, and we've really, really honed it in on the best. Again, my partner has been trading for over 10 years, experimenting with option trades, and this is the best of the best ideas we could ever come up with. I'm going to do this for the rest of my life. And so for the future plans, we just launched 2-3 months ago, and we're fundraising. So, anyone is interested in investing in this fund, feel free to reach out. You can maybe include my email in the description. Yeah, feel free to reach out. We're fundraising. We're trying to raise a solid round and then use this as a base to continue trading. And again, I plan to do this for the rest of my life. 100% of my personal net worth is liquid net worth, at least, is in this strategy and this fund. So,
Oh, wow.
yeah, I mean, I've seen it every single week, every single day, and I'm confident in our risk management abilities. So, yeah, next step is fundraising and grow this company to a large scale and scale out this idea. Yeah.
Awesome. Wow. It really tells us how, passionate and dedicated you are to this. So good luck.
Thank you. Thank you. Yeah, it's a measured approach. Very, we only trade on names we've been following for 5 to 10 years. And again, maybe I'll do more experiment in my own portfolios. But like for this fund, it's only the top cream of the crop, time-tested ideas that we've had. So yeah, excited to just push this forward and it's a really exciting time. Yeah, fundraising, share with your friends. That's about it. And all the best, let's all get rich together.
Yeah, actually, so what type of investors are you looking for?
Yeah. I guess anyone who's interested in this type of fund, really, let me think, just any individuals or family offices or funds of funds, all are welcome. And again, even if the check size is really small, like, sure, like it's not a big deal, but like it won't matter. It won't make a difference to us. But it's nice to have everyone, if you want to participate, you're welcome to.
Thank you so much for watching this episode, everyone. And don't forget to like, comment, and subscribe. Thank you so much, Stephen, for your time, and we'll see you next time. Bye.